It's a possibility. I don't think it's likely. I think that you are going to see continued impact of higher interest rate or higher interest rates previous that will continue to impact the economy. So I think inflation is going to slope down. We have to see how it plays out. But at worst, I see a shallow recession. At best, I see a soft landing. Our base case is 3 rate cuts. We'll see how it goes in the next quarter. We might revise that to 2. We'd be surprised if there's only 1.
I'm going to play the devil's advocate here. Why do you feel so confident that inflation will continue to come down on a sustainable manner? Because it's not just a case of coming down if it's not going to stay down, right, Michael? Considering we've got oil prices now back up at 5 months highs, the CRB is also showing signs of hotness, and the economy, a lot of data points, including particularly on the labor front, are coming out hotter than expected.
Yes, and that's here we are in March or April. The question is, what is it going to look like in June or July? And I just think that the momentum is moving in that direction, even if we have sort of temporary bursts up. And remember, Mandy, the U.S. economy is not just impacted by what's happening in the United States. It's global as well. So if you see global recessionary pressures floating around the world, I think that's going to have an impact on the United States. Listen, anybody who comes on here and says that they know is just wrong. I mean, we're all guessing in the end. But at the data that we look at now, we have seen overall, over the course of the last 6 or 9 months, inflation's been coming down. Yes, we've had some bumps here as of late. Let's see how that plays out over time. I think just looking at the last month or 2 of data, I think is not really indicative of which direction inflation is headed.
Michael, morning to you. I mean, you also speak about expecting a mild recession then in the U.S. in the third quarter. Then, I mean, I want to ask where that would possibly come from with this data just seemingly as strong as it is. Whether it be private payrolls, yes, it doesn't have the kind of correlation to the Friday jobs numbers that we're anticipating as well. But even that's been fairly strong as well. And the market still is moving higher. Where exactly does the weakness come from? What's going to break first?
That's a really good question. And the answer is, I don't know. I think let's put it this way. If interest rates stay high, we continue to have issues with housing. We continue to have foreclosures. The way we're seeing, we have tech layoffs, which are certainly not like the entire country, but certainly tech layoffs in certain areas. I think there are enough potential negative pressures. But I think your point is a good one. There's no real obvious flag here about what is really going to cause the economy to dip into recession. In the United States, it always comes down to the consumer, right? So if the consumer is still employed, if we still have a strong job market, it reduces the likelihood of a recession. So those are the numbers we need to look at. And frankly, it's just really too early to tell at this point. But I don't think it is unreasonable to think that there is going to be continued slowdown. In fact, Powell actually said that, which is we want to see meaningful, sustainable slowing of inflation. We saw some bumps here lately, but he's implying, as he did in the last comment, where the previous comment last month, where he talked about 3 rate cuts, he's implying they see some underlying deflation occurring, or at least less inflation. And so I think we just have to watch and see what the data shows. But that's my view at this point.
Yeah, I mean.